income from traditional investment has dropped significantly since 2007. Olivia Mayell of J.P. Asset Management has joined us today to look at the opportunities offered by multi-asset. Hello, Olivia. Welcome.
Thank you. It's lovely to be here.
So let's start with this enormous drop in income in the last few years, over tenfold, isn't it?
Well, it's interesting. When you look at the picture behind us, you can see just how drastic the move has been. For individual investors all the way up to corporates, this is a really significant problem because the easy answers to income have disappeared. And that's not just in cash, which you see at the top. It's also when you look at government bonds, investment grade bonds, it's just harder to find income. So people need to look further afield, different asset classes, a broad opportunity set to find the real things that will drive their portfolio forwards, both in terms of capital returns and a good yield over time.
But asset classes returns vary enormously from year to year. I mean, what's a hot cake one year is really very poor the next year. So how does one go about this?
You're absolutely right. And that's the real difficulty for investors. Where do you put your money to consistently get it right? So you'll have a period of time, and you can see from the picture behind us, there's a dark grey square which shows you the performance of REITs. And in something like 2004 or 2010, they have a knockout year. But then you can have a year like 2007 where things are much tougher. So one asset class won't always deliver for you year on year. Now, of course, if you've got no concerns about risk and you can close your eyes and leave your portfolio alone, perhaps the risky investment might be the best for you. But that's unlikely. You need to have a diversified exposure across a whole range of assets, all of them tailored for income, that will in time give you the return profile you want and a nice consistent level of income. This chart is so interesting because the light grey little brick that we have in the wall there moves through the middle of the chart over time. So each year, a diversified portfolio of assets performs very well. Then when we look at the 10-year number, that lower volatility mixture actually performs extremely well for you. In this instance, you can see over that 10-year period around an 8% return for having much less volatility over time. And that's what investors care about. Yes, they want yield. Yes, they want good returns, but they don't want too many surprises. So this really shows you why diversification, thinking across a diversified portfolio, is really important.
Ideally, if they just wanted yield, emerging market equities or debt would have been the choice, but the volatility is very high.
Of course. So over the last few years, it's been a fantastic place to be invested, and it will be again in the future. But on a moment-to-moment, week-to-week, quarter-to-quarter, year-to-year basis, as this picture shows us, things don't stay consistent. If you can mix a portfolio together, different asset classes that offer different characteristics, you're in much better shape.
So what is it that you have to offer?
Well, I think what you have to do is look as broadly as possible. So make sure that your opportunity set is really diversified. And that's what you see here. Think across the capital structure of a company. Think across government bonds, into corporates. Think about looking at different parts of the market. So, for example, at the moment, we think that preferred equities in the US market, looking at banks that are offering those securities, look great value. Good things to invest in, great yields. That's what investors want today. Similar thing would be looking at convertible bonds for income. Small and mid-cap companies with good yields, it's a great place to put capital. But these sorts of areas are not conventional in people's portfolios. They might need some help to diversify across them, just as we saw in that last picture. So a diversified portfolio of assets, as we see here, both in the developed and the emerging markets, looking across the world, will give investors a more stable income over time, more stable returns, less volatility, and that balance is terribly useful for people today.
Olivia, thank you very much for coming today.
Thank you for having me.